Hi, I'm Rob.
And I'm Rob.
And this is Ask Rob and Rob.
Welcome to Ask Rob and Rob. You know how this works by now. You send in your questions, we answer them. It's really simple. And today, we've got a couple of really good questions. So we'll hear those in just a sec. But first, a quick recap of how you get your own question in.
Yes, unless you're a newbie to the podcast, you'll know how to do this already. But if you don't know, you've got two options. You can go to our website, propertyhub.net/ask. That's propertyhub.net/ask. Or you can call in and leave a voicemail. And you can do that on 013-808-0035. That's 013-808-0035. We do not mind how you do it. We do not have a bias on your method. What we do, though, is love interesting questions. And that's exactly what we've got in from Sam this week.
Hey, Rob and Rob, Sam here. First off, really enjoy the podcast, get a lot from it. You've really kind of helped me expand more my portfolio and answered some probably basic questions that I always have. But another one I've had more recently is seeing that you're crowdfunding, which sounds exciting. And I've seen a lot of other people talking about crowdfunding, but I'm not really sure what it means or why people would do it. Look forward to hearing any sort of advice as ever that you can offer. Cheers.
Great question, Sam. Thank you. And thank you for asking it, because a lot of people will be thinking the same thing, because this is unfamiliar, right? This is very different from an investment in property. Everyone who listens to this show will have some kind of an idea of property investment. You may not be an expert, but you kind of get it. But making an equity investment into a business, which is effectively what this is, you've probably never done before and won't know much about. So we'll talk a bit about how that works in general. We won't talk about our campaign. If you want to know more about why we're crowdfunding and what that specific opportunity looks like, then you can still pre-register. You've got till Thursday. It's not quite too late. You can go to propertyhub.net/crowdfund. But for crowdfunding in general, I think the important point is this is not an investment that you make because it's an investment that you want to make income from regularly. So as a general rule, businesses that are raising money through crowdfunding are taking the money that comes in from product sales or whatever and investing that back into growth. The mission of these businesses is to grow as fast as they can. So they're not just banking a whole load of profits that can then be paid out as dividends. Everything that comes out is invested back into acquiring more customers, developing the product, into inventory or stock, and all that sort of thing. So it's not an investment you make because you want to get paid every month. It's an investment you make because you believe in the long-term prospects of the company, and you believe that one day it's going to be a lot bigger than it is today, and therefore your shares are going to be worth more. So if you invest in a company when it has a particular valuation, then in a few years' time, that company raises more money or is sold or lists on the stock market at a much higher valuation, then the shares of that business that you've got are going to be worth more.
And depending on the success of the business, sometimes a lot more. Successful companies that have crowdfunded and gone on to raise much bigger valuations in the future, you may have heard of Monzo, Revolut, Free Trade, and many, many others. People who invested early in Facebook probably feel quite smug right now, and very rich too. Now, we're not saying we're Facebook, but we are excited about the future of Portfolio and Property Hub. So if you want to learn more, make sure you pre-register. Go to propertyhub.net/crowdfund. And when you go through to the Cedars website, that link will take you there. Make sure you sign up, do all the AML checks so you're ready, because we've got a lot of people on that list now. So the ones who are ready are going to be the ones who are able to take action first if they want to. So make sure you do that tiny bit of admin so you're best prepared for Thursday. And then on Thursday, you'll get a video, you'll get a pitch deck, which will go into much more detail of our vision for the future, and you can decide whether you want to be part of that or not. But it's going to be really useful, all that information. And then hopefully lots of you go on to invest with us, in us, and we go on to do something really exciting in the future. But that's up to you. For now, you just need to pre-register. And you've not got long left. So go to propertyhub.net/crowdfund. And if you've already signed up and not done the admin, go back in, get that done, and you'll be ready for Thursday.
Okay, let's hear our next question now. This one is from Argent.
Hi, Rob and Rob. This is Argent from London. I had a question about the 18-year property cycle. In your opinions, is it a good idea to time the 18-year property cycle by keeping cash liquid and outside the property market until the crash hits, at which point you can buy properties at a relatively discounted valuation? Or do you think it's a better idea to simply buy the market at its price over the long term?
Thanks, Argent. Really good question. And I like that you've approached this in a different way, because there's a lot of people I've seen message me privately or message Property Hub or asking forums or all different places, the same thing, which is, well, if there's a date in the future it's going to crash, so I'll just wait until the crash and then buy. Even I've said that, you said, is that the way? Or is it better to buy and see this as a long-term investment? And it is without doubt the latter. Without doubt the latter. Property investment is a long-term play. Can you make money in the short term? Yes. Can you make money in a boom environment, which we're pretty much going into right now? Yes. Should you plan to? No. Should you always plan for the long term with property? Absolutely. They're the people who will do best with property. They'll make better decisions. Now, I'm not condemning people who go for the short term. If you're really switched on and you've done this before, experienced, you can take advantage of this window that we have. And it's a multi-year window, at least we think so anyway. So playing for the long term with any investment, but particularly property, is always the way forward. Now, let's just say you were in it for the medium term. Should you still invest? Well, the answer would be yes, because if we look at what's going to happen over the next however many years, we expect it to be strong growth for multiple years. And then when it crashes, it only wipes out the last 2 years of that growth. So if you listen to our recent episode on the 18-year property cycle, which I really do think is a must listen, please go back and listen to that episode. If you listen to that episode, we talk about how it's only the people in the winner's curse, which is the last 2 years of the boom cycle, that get punished. We're at least 2 to 3 years away from the beginning of that phase, at least, and it's possibly longer. So if you believe in the 18-year property cycle, which we certainly do, then you're going to have multiple years of growth before that plays out. So if you are a believer in the cycle, then that will give you a lot of confidence to invest now. But if you're not, and it's completely fine if you don't buy into it, the principle of just investing for the long term will see you do well in most asset classes because time is a great healer. It's highly likely to look after your investments, both in property and everything else. It's only those who panic in these cycles that seem to get burned, but those who take a long-term approach to any investment will do better.
Well, there you go. Another 2 questions answered, and we're looking forward to doing it all again next week. We're also looking forward to Thursday, big day. It's when our crowdfunding campaign goes live, and we've got a very special episode of the Property Podcast planned to celebrate that one. So please do join us on Thursday. We'll see you then. Bye-bye.
Bye-bye.